Well, thank you, Ms. Pratima Divgi, Director of CDP Hong Kong, moderator for that session. And surely that session has provided some insights, ideas, and information how we can make sustainable financing the pathway to business sustainability. Right, time to move to our next session, which is a fireside chat, a sharing session, the HSBC Amanah experience from triple bottom line, people, profit, planet, to TCFD. Moderator for this session, well, he leads the specialist sales team for ASEAN based out of Singapore and equities and equity derivatives specialist himself. He has spent the last 5 years working across Bloomberg's client base in the ASEAN region. He was previously a relationship manager based out of Bloomberg's European headquarters in London, during which time he managed private banks, family offices, and independent asset managers in Zurich and the rest of German-speaking Switzerland. His responsibilities included both growing Bloomberg's footprint in the region and managing the existing business. The speaker for this event from HSBC Amanah, the Chief Executive Officer of HSBC Amanah, Mr. Raja Amir, and the moderator, whom background I read earlier on today, Mr. Vignesh RS, Head of ASEAN Specialist Sales at Bloomberg Singapore Private Limited. Over to you, Mr. Vignesh.
A very good morning, ladies and gentlemen, and welcome to Go ESG ASEAN Day 2. My name is Vignesh, and as your MC had introduced me, and this morning we have the pleasure to hear from the CEO of HSBC Amanah, Mr. Raja Amir. Our discussion today is primarily going to revolve around HSBC's experience of going from triple bottom line to TCFD, and I hope you find this conversation insightful and have some key takeaways that you can take for you to start on your TCFD journey as well. So, Mr. Raja Amir, welcome, and it's a pleasure to have you this morning. Let's really start with, could you walk us through a bit about HSBC's journey towards being a sustainable bank? What were some of the drivers? What are the thought process around it? And where is this really all coming from?
Righto. Thanks, Vignesh. Assalamu alaikum. Good morning to participants. It's a pleasure to be on this platform with yourself, Vignesh. So, in terms of our journey, I must say that it's quite embedded with what is happening in the global space, in line with what HSBC Group has announced. So, some of those. The drivers behind that is to be part of the solution to the world issues that we're facing, especially which was exacerbated by, the current pandemic. So what's happened at the global level is that we've made certain commitments, some of which is to finance up to 1 trillion in sustainable financing in supporting our customers' transition. We've also committed to be net zero in our own supply chains by 2030 or sooner, and a lot of things are happening on that front, as well as in our finance emissions portfolio by 2050 or sooner. So with that, with that in mind, in terms of what was happening at the global level, and then what was happening in Malaysia in 2017, primarily by the Central Bank of Malaysia rolling out the value-based intermediation, and HSBC Amanah being one of the first signatories to that pledge, wherein what Bank Negara was trying to establish was that Islamic banks need to do more in terms of financing, the maqasid the pretext of maqasid al-Sharia, which is beyond just profit. So how we, as being an early signatory to that, and looking back internally, what is our statement of purpose in this organization? So we had an offsite in Taman Negara in 2017, and together we asked employees, how do you see our role in the community that we serve? So this was sort of a brainstorming session amongst the top team, and it came back that we want to embed on a journey towards becoming a sustainable bank, because we want to play a leading role in not only what is happening in the global space, but specifically in support of the central bank's initiatives. So with that, what we have committed to, and I say it's our ambition because it's something we're working towards, is for our portfolio to be 51% in alignment, God willing, by the end of 2022. Subject to obviously market conditions. 51% in alignment with the triple bottom line, which is looking at the 3 Ps: people, profit, and prosperity. Sorry, people, planet, and prosperity. And this has been supported by also the timely rollout by Bank Negara's climate-based taxonomy, which is something that we are also embedding into our portfolio. So that's just a bit of a quick sneak into what was the motivation behind it.
No, I think you're very. You definitely gave us a good insight to some of the thought processes behind this. I think I caught a HSBC ad on YouTube the other day, which talked about this 1 trillion spending to be part of the solution. So I think this is really a global push, and HSBC is very vocal about this. There's something that you mentioned earlier where on your offside, you talked about purpose, and everyone talks about purpose-led leadership, right? I'm sure when we talk about making a change of this nature to the way you operate, it would have been challenging both internally and externally. And I think what may be interesting here, especially for the audience who might come from a similar background of yourself, is to hear perhaps what are some of these leadership challenges and what are these internal challenges that you faced, and how did you and your leadership team address some of these to take HSBC Amanah forward on this journey?
Yep. So, I do need to credit my, the predecessors in the organization for that, because they did, they did some of the heavy lifting to get us on the pathway to where we are now. So it is normal in any organization, you will face resistance to change, and when people, especially in an organization which is, in any organization which is profit driven, and that's I say for all organizations, to give people additional work in their already extremely burdensome daily jobs is obviously something which will face resistance. So we are, I guess we're blessed in a way that this is at the group level, this was something which was being rolled out in Malaysia as well in 2017. So that helped somewhat in the conversations internally. But nevertheless, as I mentioned, there will always be resistance when you're asking people to take a different route. So what we did was essentially that, once we had convinced the relevant people that this is indeed the right trajectory to take, it's very why would HSBC Amanah be the perfect candidate for this particular journey? Being an Islamic bank, it is in our DNA to look beyond people profit and to just beyond profit. And essentially, one of the key challenges that I am currently facing and hope to overcome is essentially, figuring what is our baseline, right? Because we have never really looked at our portfolio from the perspective of what are the clientele groups that we have, who is in the ESG journey, who is not, what are some of the financing products. We've never categorized it as such. So that was, that was the initial challenge. And myself being an executor, formerly, head of DCM, I was particularly drawn to this whole idea of execution because, that is my forte. So looking at, so what we've done currently is that we've actually gone deep dive into the portfolio. We have identified, on the wholesale side, which clients do fall into a ESG category. We've also looked at what are the intents and purposes of some of those financings that we've given. What did they use it for? Obviously, working capital is slightly a bit difficult, but we've looked at particularly the label transactions that we've done. And then on the retail side, we've started to look at what is the category of the customers that we have financed, right? In the past we would look at credit scores, but now we're looking at what economic status do these borrowers fall into, and what have they used the money for? So these are some of the, I guess, the challenges, establishing the baseline as to what's where we are in the whole journey, and then that the whole TCFD journey as well falls into this. Obviously there was, when you ask a department to take on a role like that, and this is again beyond their daily activities, you will face resistance. But I think we, as an organization, we have come together and we have said that we need to disclosure is key, and to disclose over and above what we have done from a financial matrix is important. And alhamdulillah, I can say that it was we've managed to get the buy-in from the relevant stakeholders.
No, that's great. I think that's probably testament to you and your leadership team and your predecessors, as you mentioned. I think that something that probably is on the audience mind is, as a financial institution making this pivot, right, to have 51% of your portfolio in sustainable or sustainability linked projects. What's the impact on your existing clients going to look like? What's the sort of projects you're going to finance under this new pivot? Is it going to be like the Singapore banks, DBS, for example, last year came out and said, we're not going to finance any more coal and brown projects, for the lack of a better word. So what's the sort of route that you guys are taking on this, stance on this journey?
Yeah, that's a very relevant and pertinent question, which is often posed to me. Are you going to forsake growth? So it's really a two to tango sort of scenario, I must say, Vignesh. We can only do this, in tandem with our clients. So, i.e., if our clients are on that journey, we want to support them, and we have a full suite of financing products which can support them in that transition. So, if I just talk about the clients in their own journey, because we've been having a lot of deep diving with a lot of our key clients, explaining to them our own journey, and the question is, where are they in the whole transition? And surprisingly, some would say that it's quite surprising that a lot of clients have already began that transitional journey. So for some, it's not an alien concept. For some, obviously, coming out of the pandemic, that was not top of mind. Top of mind was preservation of capital, preservation of profit, keeping the company afloat. So therefore, where we are on this journey is that, we've already made certain commitments at a group level. We won't finance coal, in certain areas, and things like this. So that's already driven from the top level. But again, I stand to, we benefit a lot from what the regulator is driving. So the regulator in Malaysia is very proactive. They're rolling out climate-based taxonomy. So banks are going to need to report on their climate exposure by next year. And even with Bursa, who is also very aggressive in terms of guiding PLCs towards that sustainability journey, the inclusion on the FTSE for Good Index, for example, is one of the many catalysts in place, that is assisting clients in this journey. And if I talk about, just a survey that HSBC has done recently, it's in 2021, which was a sustainable financing and investing survey, just to, it gives us a bit of a gauge in terms of what clients themselves are thinking. So the survey was undertaken by 2,000 capital market issuers, and mainly, they were institutional investors, but 94% of companies expect to move away from environmentally and socially challenged business models in the next 5 years. In terms of issuers, 41% say they need financial help and investment to meet their goals. And specifically in Asia, 63% say they need a lot of help. So therefore, this is exactly the role that we want to play. We want to transition we ourselves are going through a journey, and we want to hand in glove work with these clients in this orderly transition phase. And again, give you just a quick example of what we've done in terms of walking the talk. So in 2018, we ourselves issued the world's first UN SDG sukuk by a financial institution. And we need to report on a yearly basis where we have used those proceeds for, and what is the impact of those projects. So therefore, we want to demonstrate that whilst we are asking you to do this, when we pitch to you, but we ourselves have done it, so we know the the pain points.
I think that's a key point that you bring up, and that's some interesting numbers there, with especially with the 63% wanting help to go through this transition, right? I think what's interesting is the commitment that HSBC has made, between 750 billion and $1 trillion to finance and the entire transition. I think at a group level, what stands out to me and probably to anyone is the fact that you guys want to be part of the journey of your clients. Do you think you could give us maybe an example in a Malaysia context? What do you think this might potentially look like?
Okay, in terms of examples of how we've rolled out, some of this financing?
Yeah, possibly.
Yeah. So, okay. So, just in terms of some of the examples that we have, we've financed this year, especially, has been, quite exciting. So we have advised the government of Malaysia. I mean, that's a capital markets issuance in terms of their, the world's first sovereign to issue a sustainable sukuk. But that's not really financing; that's advisory. But definitely, it is a landmark transaction and a step in the right direction for the country, especially as in line with the national determined contributions of Malaysia. But when it comes to financing specifically, we have financed a trade financing solution for Guangchong cocoa manufacturing, and this is for the supply of sustainable cocoa, which means that under this facility they have to provide a source of the sourcing of where they obtain their cocoas from, and that cocoa needs to be certified as sustainable, right? So that's one of the interesting ones. We have a global trade and receivables financing solution. We have a sustainable supply chain financing solution, and particularly one really interesting transaction that we did was for an oil and gas company called Yinson Holdings Berhad. Now, Yinson is an FPSO provider, in an industry which is very challenging. So they have a very strong commitment towards that transition, and what we did with them was a sustainability-linked financing, and this was an award-winning transaction in 2020. And how it works is that if the company achieves their stated goals within the KPIs, they will achieve a certain reduction in the profit rate for that financing. And if they don't achieve those KPIs, then it will be a step up in the rate. So so we started with Yinson on that transaction, which was bilateral financing, and that gave them the confidence to say, hey, this product works, and I'm committed to these KPIs. And I'm very proud to say that this morning we have just launched a 700 million, up to 700 million, with an option to upsize ringgit, Malaysian ringgit sukuk for them. In the morning, they're actually book building right now, and it's a sustainability linked sukuk with 3 very, very ambitious KPIs, and it's currently book building is underway. So this is sort of a bit of one of the transactions we've done, and just to show you the example of how, from a bilateral financing, the company has gone on to a more public capital markets issuance under this product. And if I could just add in just one quick point, we also have a under this facilities that we've talked about, we've just launched a 1 billion ringgit sustainable financing portfolio, which is going to be rolled out in January up until June. And there is certain reliefs under this particular package, and we will be, basically that would support our project Cocoon ambitions as we drive to that 51% ESG requirement.
And that's fantastic, I think, especially given that it's a fossil fuel industry and you have ambitious KPIs. And I think with things like cocoa, there was always a concern around child labor and things like that in a lot of cocoa producing countries. I think with just one question before we move forward on this related topics, right? With all these KPIs and things like that, there is always concern amongst investors, and increasingly you read a lot of this narrative online of greenwashing, right? Companies are greenwashing, some of their metrics to look good and appeal to ESG funds or meet some of these financing KPIs. Any thoughts on that?
On the KPIs, I mean, I must admit that having particularly worked on this Yinson transaction, so I think the what's happening internationally is that a lot of the second party providers are under pressure to ensure that the ambitions that they sign off on are indeed something which is measurable, something which is tangible, and something which is indeed ambitious for where the company is as in respect of their baseline. So I can assure you, in terms of at least the transactions that I've been involved with, it was by no means an easy way to get through those second party opinion providers. So in terms of Yinson's current transaction that they've announced, they've said that they will the KPIs that they're measuring are in terms of their how much is their green produced energy from their existing plants, what is, and also reduction in greenhouse gas emissions as measured by barrels of oil, and also measured by their the production on their plants. So they've established, what is, and in this second party opinion, it says, which one is the core KPI, and which one does not even have a baseline, so they're not able to measure, is this actually improving over next. So it's very transparent, it's there. And in terms of the step up, so for this particular instrument, which, because it is a capital markets instrument, there's only a step up. There's no step down if they achieve the KPIs. It's only punitive. There's no sort of reward in the sense that if they do achieve their KPIs, as opposed to the financing we did, which was a bilateral, so we can show we can show an improvement in the rate. So this is really them going out there, right? Saying, hand on heart, saying that I will try to achieve this, and if I don't achieve it, I will pay a step up. So in that respect, I don't think there's one can even sort of say that there's any greenwashing there, because they are putting themselves out there to a very ambitious KPI. But obviously that topic about greenwashing is important, and is also something which is highly it's a very current and focal point, and these are things that we need to take into consideration, especially as financiers, to ensure that what we do finance has a tangible effect.
Got it. No, I think that's excellent. I think coming back closer to home again, and I think this is not just a Malaysia problem or a emerging market problem. Like something that you even hear in places like Singapore, right? There is a common misnomer that sustainability and ESG risk management and reporting, putting processes in place, all of this is an extra cost. It's a burden on the company, and it doesn't really reflect in shareholder value or share performance, price performance of the shares and stuff like that. I'm sure in your engagement with clients, you probably hear this, you possibly hear this. What are some of the things that you guys are doing to drive this mindset shift? Because I think that's what this is really about.
Yep. It is a common question when when we do fundraising, for example. The immediate question is, how much basis points am I going to save from structuring my issuance in this format? That's always the first question. So from a fundraising perspective, what we've seen is that the outperformance of the issuance in the secondary market, because it's green and there's so many funds which need to comply with green, are chasing these particular issuances. So typically you would benefit from number one during the book building phase. There's more demand which would drive down the compression in the pricing, and in the secondary market, because people are also investors are chasing it because there was more demand than supply. It basically tightens your curve, and the next time you go out to the market again, you're pricing it off your existing runs, and therefore that will allow you to achieve a better pricing in the next time you intend to do an issuance. Now, in terms of returns and shareholder value, I must say that that is something that we feel that there's a strong correlation between returns as well as this embarkation on this journey. For example, if in Malaysia, if you achieve a certain ESG score, which is measured by three components, which is your environmental score, your social score, and your governance score, you are included into a FTSE for good index. That's just a Malaysia example. I'm sure in other markets you have similar indices as well. And by inclusion into this index, what we have seen is that you have a bigger following, and as more funds are required to track inclusion into this is one of their criteria, that will surely outperform in terms of returns for yourself. We've seen this in the Sharia index itself. When a company has dropped off the Sharia compliant index, the market capitalization has reduced somewhat as a result of that. Now, in terms of just a quick study, we noticed we had worked with London Business School last year, and they have undertaken a portfolio analysis. It's slightly out of date, but it just speaks to the period of 1992 to 2010, right, which is an 18-year period. And what the result of that survey was that the fund which particularly tracked the sustainable business had grown significantly to 22.6 billion by the end of 2021, in contrast to the fund that did not, which had only grown to 15.4 billion. So they measured two funds. Both of them had the same initial size. One was invested into ESG companies, the other was not. And the one which had grown by a significant margin as opposed to the one which is not. And also specifically, that study found out that high sustainability portfolio significantly outperforms a low sustainability one in 11 out of the 18 years, and also exhibits lower volatility at the same time. So I think these are just some quick data points for consumption to show that there is a business case.
No, I think that's spot on in terms of what you just mentioned. I think coming to HSBC's TCFD journey, and just in the interest of time, I think being the first bank that has embarked on this journey in Malaysia, what are some of your takeaways, and what have you guys learned through the process as an organization?
So I think one of the key takeaways that we've learned from this thing is, obviously that we were concerned essentially this is the first cut, right? This is the first bank to do so. Will people scrutinize this in that sense? But what we did is, we essentially, we took the stance that, look, this is our first cut of, or rather our first disclosure. And, we put ourselves out there. And what we obviously intend to do internally is as we develop, because as we start to measure, particularly our portfolio, we will develop and we'll be able to show more matrices and we'll be able to show more, more development within that portfolio. So the key takeaways is that, people are going to initially be reluctant to do it. But, when you come together as a team and you see the benefit of doing such non-financial disclosure, that really does increase the transparency, and hopefully it's our strong commitment and statement of intent. Now, in terms of just again, I must say, regulator in Malaysia is devising a mandatory or will be devising potentially a requirement for public listed companies to disclose their TCFD in the next, and they have a trajectory. Initially, early days, you have such a baseline, and then as you go, it needs to be more in depth. So I would strongly encourage people and companies to think about it. It's not easy, but hopefully the results will speak for itself.
Well, that's great. I guess that's emphasizing the point that this is an ongoing journey, this teamwork, and obviously the regulators part really comes in. I guess to wrap this up, if you had 3 lessons for leaders in the audience, your fellow C-suite members who might be in the audience today, what would that be as they embark on this journey?
Not to sound like a broken down record, I know you've heard this repeatedly, but I mean, the truth or rather the proof in the pudding is that this is an investment into your business. You need to look at it from the context of, the same thing as digital, right? I mean, if this is an investment and it's not a cost of doing business, it's an investment which will reap, God willing, returns in the future. Secondly, in terms of defining moments in history of corporates, right? This is the next decade will be defining in terms of those companies who do embark on this journey and those who don't. And the recommendation is to if you want to remain competitive, and we've seen various companies who have taken the leap of faith. Deso, a Dutch carpet tile manufacturing company in Holland is one clear example. They changed their whole business model, and it was faced stiff resistance from shareholders because they did it a whole circular economy sort of business model. And in the end, they actually were acquired by another company, and their market value and shareholder value increased substantially. So that's a case in point if you want to look into that case study. And then just finally start the journey now. We are in a transitionary phase, and it's early days, and a lot of the society may not be so forgiving in the future. So take that leap of faith, take those steps currently, because we're in this transition phase, and reach out to ourselves. We are happy to support you in this journey.
So Amir, thank you so much for that. It was a pleasure speaking with you, and I hope our audience have gained some insightful takeaways from this conversation. Thank you very much.
Likewise. Thank you, Vignesh.
Well, thank you, Mr. Raja Amir, Chief Executive Officer of HSBC Amanah, and the moderator, Mr. Vignesh RS, Head of ASEAN Specialist Sales at Bloomberg Singapore Private Limited. Thank you for a very interesting and insightful fireside chat on the HSBC Amanah experience from to TCDF. Right. Thank you so much for that session. Right, ladies and gentlemen, time for a short break right now. And while you're having your break, please do drop by at our exhibition booth featuring companies such as Sarawak Energy Berhad, Capital Markets Malaysia CMM, Bursa Malaysia Berhad, and Tenaga Nasional Berhad, or TNB. Just have a quick chat with their representative and you can find out more and you can understand how they play their role in accelerating the SDGs. And also a couple of things which I would like to share with you. Number one, the photo booth. We have the photo booth. All you need to do is click on the photo booth tab above. And once you click there, you can take picture. Don't forget to tag us on your social medias at UN Global Compact Network Malaysia and Brunei. Please use the hashtag GoESG ASEAN 2021 or hashtag SDG Ambition Month. Yeah, those two hashtags, GoESG ASEAN 2021 and hashtag SDG Ambition Month. And also another thing about our virtual networking lounge, you can always drop by at our virtual networking lounge. All you need to do, again, click on the lounge tab above. And once you are in the virtual lounge area, click on the table number to join a networking room for you to connect with other participants to today's event. So you can do that during this break, and I'll see you back here at 11 for another panel discussion on pushing the sustainable finance dial, the role of national institutional investors. I'll see you at 11.